presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show in TFNN's office this morning. It's nice to be here. Nice to see all the guys at TFNN today. Let's get right into gold. And I've been on the road for a couple of days, so I apologize for missing a couple of shows. We're trying to get the scanner installed, the newest scanner installed on one of their machines down here, so I can show you that. Hopefully that thing's final. We can roll it out today. Taking a look at gold on the weekly. Obviously we had a pretty good market rally, but gold is kind of coming to a really, really attractive area, actually. Let's take a look and see some numbers here. Let's take a look at what our weekly for highs are. Same thing, of course, 1235, 1236, but we've reached a low of 1238. So we've gotten into that neighborhood and bounced up a little bit this morning. Here's the daily on gold. Actually, let's make sure we got the right month here. I apologize. Been traveling so long, got the wrong month. There we go. All right. So taking a look at, let's look at the continuous here. I'll tell you what, let's come back to gold. Let me get that set up properly. Taking a look at the dollar. Obviously, the dollar has a relevance on all commodities. We're going to take a look at this. So this is, something that I was hoping that we could migrate a little bit farther south on. 99.63.64, that big number, closed last week below and then just kind of did the reversal. That's a pretty powerful statement when it comes to the dollar. You got to pay attention to that. But what's happening now is we're coming back up into resistance on the time frame that's one slot over to the right, the daily, and we're looking at this 146.47. So 100.46.47 on the dollar. So we've reached resistance. As you can see, we kind of did that reversal on the weekly. Now, if you traded that reversal past couple of days that I've been out, you've got to be willing to look at this as short-term resistance. Weekly close today above that 99.63 looks like it's going to be pretty much a given. So as we look at this, right now it's kind of a wait and see. If you traded the reversal, you've reached your targets. I'm not saying it's time to go short there because that weekly reversal is a pretty powerful statement, as we just talked about. Let's take a look at the 10-year just to go through some of the usual suspects here. Here's the daily on the 10-year. We've talked about this particular trade not having a lot of leverage either way, just kind of being chop city. That's still the case when it comes to looking at the 10-year and the 30-year. I still don't think there's too much direction to take advantage of when it comes to looking at the treasuries, the two benchmarks that we look at. The VIX, the poor little VIX, just migrated back down south. So we reached those targets up top, 1463 on the VIX, and now we're back down at the bottom of the profile on the weekly. And if you're typing in things in the den, I do not have access to look at that during the show, so I'm going to have to check it out on the break. Take a look overseas really quick. CSI 300. Never quite got to the tick up top this week. Reached a high of 35.05.06. Those for highs 35.21. So got extremely close to it and backed off. So that's what your CSI 300 looks like. We finally met the targets, that neighborhood up top on the CSI 300. Let's take a look at the NASDAQ. And then, of course, we're going to look at the S&Ps. All right, so here's the NASDAQ right now, today, coming back up into weekly for highs, but the daily for highs are basically at the same level. Here's the daily on the NASDAQ. And as we look at this, what the question is, what do you do with it now? Had a pretty good reversal of fortune in the S&Ps and the NASDAQ. when we're sitting on the highs right now, this is a pretty low probability trade to short. I'm not a big fan of double tops, triple tops, all those types of things. When we get into these areas and reverse back up into them on all-time highs, a lot of times, as you know, they will shoot through just to do something nasty. So let's take a look at the S&Ps. Last week, that 2341 number was a pretty big deal. We kind of had some negative breath numbers as we started the week, had a little bit of downside action, obviously, and the past couple of days we've been, ramping back up as well as the NASDAQ. But, what do you do with the S&Ps now? I'm going to get into the S&Ps a little bit more dissective, I guess, as we pull up the scanner in the next segment or two. I want to take a look at some of the figures in there to try to give us a little bit of an edge to trade the S&Ps. But, the markets, that's a pretty strong showing to have a reversal like that, and especially the tech sector on the highs again. Silver. Get my screen right here. Silver, this is the continuous on silver. And as we look at this, silver's obviously in some resistance areas right now, but we're going to talk about this a little bit more when we come back, folks. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. And the thing I was going to show you isn't, I don't see it on here. All right, we're going to have to look at we just installed the new scanner on the system here at TFNN, so we'll have to look at that on the next break. I'm showing it right now, but I wanted to show you this opportunity matrix. I'll explain a little bit here. You know, one of the things that we put into this version was what we call an opportunity matrix, and what it allows you to do is look at, you know, all the opportunities, rank them from a risk-reward standpoint, look at the beta in a rolling 50-day capacity, and then create your own custom beta look-back. And the theory there is, and I'll just talk about this for a second. We'll hopefully get the correct version up on the system here later. But the theory is, if we've got a beta, let's just say a beta is 1 of a stock, which means it pretty much reacts to the market. And the market's, let's say the market's breaking out, and your stock in a custom beta look-back period, maybe it's got a beta of 3 for the last 6 days. And that stock is breaking out. So, you know, the volatility of the stock is obviously a little more reactive than what the market than it normally does with the market. So that breakout will be a little bit more of a valid reason to buy the breakout, especially if, you know, in the last couple of days you've had a higher beta value relative to the stock or to the market itself. But on the other hand, if you've got a stock that's underperforming in beta, so let's just say you know, like a stock has normally got a beta of 2, and that stock seemingly is at a beta of 0.85 or something like that for the last, you know, 6 or 7 days. Well, the theory on that one is the breakout actually, if the market does break out, you know, the mean reversion type activity of that custom beta as it's defined would allow you to kind of get more bang for your buck and look for a more powerful breakout actually as it starts crossing some of these borders on the profile. So a lot of the information in the scanner is, and I'm going to be able to show it to you, promise, I think is really unique, and it allows you to look at targets as far as, you know, top of the profile, bottom of the profile on different time frames, weeklies and dailies. All those setups are based on weeklies and dailies, because I personally feel that those are the more powerful setups on the screen and the one that you can really get higher risk reward. So how do you create a risk reward? You got to have 3 things. You got to have an entry, a stop, and a target. So what we've done on that is, you know, if there's an uptrend support type trade where we're in a defined uptrend and we're on support, the target on that situation would be the top of the profile, either on that time frame, daily or weekly. The stop is always going to be relative to the profile itself, and the entry is obviously the in that particular case, the bottom of the profile. So again, if you watch my show a lot, you'll understand what I'm talking about. But if not, basically, you know, we have 3 lines that we talk about all the time. These are profiles, volume relative to price. And the 2 lines I'm talking about are the upper limits and the lower limits, which are the standard deviations away from the mean of that profile. So Larry uses Fibonacci a lot. I mean, he uses it very well. He's a master at it. This is not Fibonacci lines. These are basically volume at price profiles. So if you have a breakout outside of a profile weekly and daily, let's just say you are having, and I'm going to, again, still talking about the scanner here, you're breaking out above weekly and daily unfair highs. Well, how do you know what the target is? Because there's no new profile higher. Maybe we're, you know, in an uptrend, and these are kind of new highs for the stock. What we're using for targets in that scenario is a 13-week look-back period average true range. So we feel that, you know, if you're breaking out of a profile or of a balanced area, you've got to, in a case like that where you don't have any existing inflection points to pay attention to, what we use is that what I just said, an average true range for the last 13 weeks, because we feel like you would at least have that target-rich environment of another week extension on a breakout. Now, these, when I talk about the numbers on the targets and the entries and the stops and then the risk rewards, these are just to kind of define some opportunities. These don't have to always, you risk $1 and you're going to make 12 on some of these 12-to-1 risk reward scenarios in the opportunity matrix. They're just showing you powerful opportunities that have the chance to extend that far. But the setups, I mean, as a guy who's periodically gone into or been in front of a trading screen for a long time and periodically gone into a casino, you want to know when you're trading or any other type of environment like that, you want to know that you can always feel like you have an edge when it comes to getting the most out of your money. So if I'm going to risk $1, I don't want to have the upside of 50 cents. And a lot of people trade that way, believe it or not. A lot of people can't stand to see profits. They take them off the table as soon as they see them and never let profits develop and breathe, so to speak. So this is something that I like to see when I'm trading is a really good risk reward scenario, and I think this is going to be a pretty good way to define those. Tell you what, let's go back to my my other screen here. We were finishing up with silver, and as we look at these weekly unfair highs that we were talking about, and we're going to come back to the scanner in just a little bit. 18, I think this unfair high is about 1814 are the weekly unfair highs on silver. I'm expecting gold to bounce here. It's interesting that silver is kind of sitting more on the unfair highs than gold right now. You got to look at that as somewhat of a relative strength situation. So, I like gold as a bounce, but I also like silver kind of crowding and compressing up into those weekly unfair highs right now. Let's take a look around and see how some stocks have acted on this bounce back here. The XLF, the sector, this is one that has really had a really massive snapback here up into these weekly unfair highs, weekly unfair lows around 2411. But as you see this is a little bit different than what we looked at with the market in general of the NASDAQ. I actually look at the XLF now as close below, go back and retest at the final end of the week. So 2411, in my opinion, could be a selling point for the XLF. Let's take a look at the XLE. All right, so, that's kind of interesting how that worked. 68.14, got right down to the bottom of the weekly profile and just bounced. And a good bounce. And again, if we're looking at risk reward scenarios, this is one, and I'm looking at the weekly right now. This is a really good example of what I just spoke of. So the scanner is going to give you these battle points and show you when we were in uptrend support mode. It's going to look at something like the XLE. Understand that 68.14 would be the entry point. Understand that the stops need to be relative to the profile itself, and know that let's just see what is, okay, so that would have been initial targets of 69.56. All right, why? Because that's the first point of resistance on the daily, and that's the way we set it. So 69, I can't see, 69.56. So let's just take a look at the numbers here. 69.56 and 68.14. And we're looking at about $1.40, and the stop on this case would be approximately 20%, 15 to 20% stop on the height of the box. So you're looking at what is that? 5.5 times 20. Okay, so you're looking at on this one almost a 2-to-1 risk reward scenario. That's not a bad one. I think the scanner's going to hunt and find 3 to 4 to 5 to 1s. But when you're looking at the XLE and you're looking at a long-term move and a pullback to a very ripe opportunity, in addition to having a risk reward scenario in your favor, that's the things that the scanner's going to find for you. Let's take a look at the XLU really quick. So this is one I've been pretty interested in trying to stay long. Again, that weekly profile appearing above below price action. Here's our daily spinning around above these 5164s. Didn't quite hold up, and that's okay. I'm looking for this to eventually get back above 5164 and try it the same way, or migrate back down to 5059, and that will be interesting to see how that develops. But right now, it's kind of a wait and see for me on an intermediate term basis for the XLU. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new Market Safe Core Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you could potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Okay, so I've got and I'm showing, finally got this up, my fault there. Finally got some of the things I was talking about earlier with some of the concepts up on our screen right now. And what this is that dial in your own custom beta period. So if you see me ratcheting that up to different day time frames, this is a look back period based on days. You'll see the custom beta changing. So all right, so what I've got here is I haven't blocked out anything as far as different types of custom trades here or custom setups. But what I want to do here is let's just block out the longs for a second, and let's take a look at the short opportunities. All right, so again, going back to the S&Ps, you know, the S&Ps have had a pretty good reversal here. We've had some breadth calculations that have changed significantly during the week. Here's our daily, and that started changing, what is that, 328 into 329. Started getting a little positive there. And this is our, again, our S&P breadth calculations. A lot of stocks still in the middle ground, but, you know, pretty big reversal, I will say. But, you know, as that happens, let's just kind of walk through the motions here. You know, if you're looking to find stocks that just haven't cooperated, we can always go back to the brick and mortar sector, the retail guys. But barring that, if we look at the scanner just to find those things, or find things that are just not cooperating, we can find some breakdowns, some downtrend resistance trades that are in here. But let's take a look at a couple of breakdowns. So what I'm going to do is I'm going to block out uptrend reversals, and I'm just going to show breakdowns in the opportunity matrix. And what I'm going to do is I'm going to take a look at the risk-reward scenario here. I'm going to rank them on that level. So I'm going to look at this particular stock, excuse me, Envision Healthcare. And what's going on here now is we're breaking down again on the weekly. So we've had a pretty big ramp up in this. This is kind of a different animal. Let's take a look at this on e-signal for a second. EVHC. EVHC. Okay, so a stock that pretty much completely rejected 65.66 already this week. It's on breakdown here. It's on breakdown because we're getting slowly below our daily profiles again. I haven't got this showing all the action here. We've got something else coming out today on this. Let's take a look at PRGO. Let's just take a look at this one. This was the second highest ranked risk reward scenario, PRGO. Let me pull it up on e-signal here. All right, so if you look at this, obviously it's pulling down on, or excuse me, breaking down the daily. You've got all the information there. There's the level of the market. There's that daily profile. So a stock like this with a risk reward scenario of 4.2, not cooperating with the market, has a pretty decent beta correlation with the market if given a chance. But the look back period right now on this particular stock, if I dial it into about 5, it's had a pretty negative correlation lately, obviously, for the last 5 days in particular. So almost an inverse relationship to the market in general. So, you know, if the market does happen to pull back, you've got a stock that's probably going to pull back even more. And you've also got it breaking down technically at the same time. So a nice way to look at an opportunity there. Let's just stay on a 5 look back time frame. And let's look at the next risk reward scenario up there, COTY. So here's the daily. This is why it's defined on the breakdown scene. Let's just take a look at the weekly. Looking ugly there too. But, you know, a stock that has just, you know, given every chance in the world lately to kind of catch back up with the market pulling, you know, a stunt like it did this past week, you know, there's something wrong here. So if you look at the next one down the list, GT, this one, let's just take a look at the weekly on this one. Yeah, this one's a little bit more scarier trade, and it's basically, you know, broke down yesterday and has kind of rallied back a little bit. But let's take a look at this on e-signal. GT. Right, so, you know, on the breakdown list, because it broke down, rallied back pretty good yesterday. I would look at this more so from the 3609 breakdown point, that 3609 unfair low. And the way we do, okay, if stocks are gapping up or gapping down, something else I want to tell you. You know, a lot of times as we cross the borders of the inflection points, that would be your entry on breakdowns, pullbacks, uptrend supports, things like that. But if a stock is gapping up or gapping down, I mean, what do you do with it at that point? So, and how do you gauge the entry on it? So one of the things that we've done is take a look at that particular opening price, because, you know, if we put the entry price on the screen, you know, as the breakdown point, which yesterday the stock gapped down, and that entry level breakdown point was around 36.10. Somebody's, you know, you're going to come back and say, or I would too, hey, wow, that never reached that print, so how would I have ever gotten in that stock? So therefore, how could the entry be there? So if a stock's gapping up or gapping down, we're actually using the opening price, but we're also using the stop relative to the box. So that would basically say, okay, well, here's your entry, but your stop's pretty far away. Therefore, you know, decreasing the risk reward. I can't believe this one's still pretty high, but you know, what it's saying basically is, okay, you can chase it, it's on the list, but, you know, the risk reward might not be as good. All right, here's another one, kind of gapped down and rallied back a little bit yesterday. SLG, risk reward 1.45, entry 104.59. So let's take a look at this one on my screen, SLG. Here we go. All right, so defined as a breakdown based around the weekly. So let's pull this up on the scanner in a weekly mode. And I promise you we're making a pull down feature. Let's give this some room here. Okay, so the weekly, obviously, this was the point of contention here on SLG, but the opening price, that's where your entry point is, and your stop's still relative to the box. So again, giving you a breakdown opportunity, but just kind of defining some things along the way, and also allowing you to see that, you know, the beta, the custom beta on this wasn't that high, and it's normally, the 50-day rolling beta is 1.01. It doesn't get that cooler as far as something that's mapping itself to the market. So I wouldn't rate, just based on everything we've talked about already, I wouldn't rate this as a really valid breakdown since it hadn't overreacted to the market lately. All right, guys, we'll be back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. So, switched gears, got the dark clouds away from the scanner for a while, and got some breakouts and long opportunities on the screen. I blocked out everything else except breakouts. So, stocks that are breaking out relative to stocks that are breaking down, you can see the numbers there. So, if you look at that, what is that? 30 stocks that broke out right now as of dailies and weeklies. And if we go back to the short scene here, and if I just look at breakdowns, we had what? Relative to profiles, we had, let's just say 30, 35 stocks breaking out and 7 stocks breaking down. So, from a true market breadth definition, I guess, even relative to profiles, that's pretty positive. But let's go back and let's block out everything except these breakouts. I want to look at UNP, excuse me. Good old Union Pacific. So I'm going to pull it up on my e-signal charts here. UNP. And that's the next thing we're doing in that thing is upgrading the. So looking at the weekly, this was pretty interesting. I actually looked at this last week because I like this stock. I like the premise of the company relative to what's going on in the administration right now. 102.22. This was on uptrend support. So as we were pulling back, I was looking for stocks last week, especially on Friday's close, that were strong stocks that were kind of just empathetically coming down to support. So as I look at 102.22, that was, again, bottom of the profile on the weekly. Excuse me. Let me get bottom of the profile on the weekly. Let me save that. Okay. Bottom of the profile on the weekly last week, and looking in a sense that it was a stock that you could try to pick up on the cheap because the market had almost kind of forced it down into a pressure point where you could take advantage of. Now, here's the daily this week. So not only have we gotten a great bounce off the weekly, but now we've got a daily breakout going on, which means that we probably have all the reason in the world that we could get back up into 109.34. So as we look at the scanner, we've crossed the border on the daily at 106.32, and that's what that means. Your stop is, again, always relative to the profile because that factors in volatility that stops are always gauged to. 105.99, let's just call it 106. And your targets aren't on here because a lot of times we are using that 13-week average true range. But right now, since we do know the target, 109.34, we got a really good risk reward there, and that's what that says basically. So I'm gonna rank these in risk reward hierarchy here. So UMP is second one on the board. It was a great setup on the uptrend support scene at the beginning of the week, And that risk reward scenario on the scanner was actually even higher than this, but now it's in a whole different mode on the long side. So you've got support at 106.32. That's your entry point there. You know where to place your stops. You know it's a decent trade still. APH, we've been looking at Amphenol a lot. Actually, Tom and I talked about this the other day, and we actually looked at it from the scanner. APH. I'm pulling up on my e-signal charts here. Yeah, so, man, and this one was on, I think we were on uptrend support on this one too the other day on APH. So we've reached some targets. We've actually climbed higher than the target on this trade. And now we're in a whole nother mode of another target. So what this particular stock is doing, because there's no inflection point up there to use as a target, it's using 13-week average true range as the target now. And, man, what a move. We're going to take a look at some oil stocks in a little bit, folks, too. So ADS, let's take a look at this one. I'll put it up on my e-signal chart so you can see a little bit better. But here's the level of the market right now. That's going to be your targets on the breakouts. And I think, let me just go back to our daily here. Yeah, it's able to use crossing the border at that 246.97 as your entry. So, you know, at this stage, it's, you know, if you just eyeball this landscape view down below, you know, you're probably looking at, you know, 1-to-1 risk reward right now, even though it says 4 to 6. It was 4 to 6 when the trade started. But right now, obviously, you can just kind of do the math there. It's maybe a little bit over 1-to-1. So these are going to leave these trades on the board, you know, based on that daily bar still being enforced and predicating that particular custom sort. HPQ, same situation here. Kind of horse left the barn during the day yesterday. But again, putting it on your radar screen, you can make sense of it at this stage. Western Union. They love me. Decent breakout, but again, you know, looking at these during the day, these custom sorts will populate and dynamically update during the day so you can catch these. But what I do is, at the end of the day, I like to look and see, you know, what really was kind of showing itself as a powerhouse on the breakout side. Let's take a look at FCX too. Now, this is an interesting one. And let me pull it up on my e-signal charts here. FCX. All right. So there's the weekly. I'm just going to kind of give you a bird's eye view of that on e-signal because we got better charts there. And there's the daily breaking out. What we've already done with this trade is reached weekly unfair highs. Let me pull that up. I had the wrong stock up there on the chart. Freeport McNamara. So I think we've got a numbering problem on FCX wrong there. That's what was, yeah. Yep, so we're going to have to, still in beta, folks, but we're going to get this out the door. I've only seen a couple little small glitches here. So the numbering right there is, the price of the stock's 13, so it's just basically saying 1320, 1340, 1360 there. So Freeport McNamara, looking at the e-signal charts, we've pretty much reached 1359, which are the weekly unfair highs. So I would kind of look at this breakout with a little bit of reservation. Let's take a look at Franklin Resources, BEN. All right, so, and I'm going to slide my chart over. That's a scaling issue. Like when we looked at FCX, there's the correct numbers there. If you slide it over too far to the right, you kind of lose some of the numbers, so that was my fault there. But let's take a look at Franklin Resources. Okay, so there's the daily, here's the weekly. This one's a pretty poor risk-reward scenario, all things considered, and I'll explain why when we come back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Okay, we were looking at a lot of custom sorts relative to the opportunity matrix. Go back into here and take a look at that again. So downtrend is really what is appropriate right now in my mind. Breakdowns and downtrend resistance. Downtrend resistance, as you can see, and let's focus on this little area right here, basically, the landscape view within the scanner. So I can kind of go down the list. There's Goldman Sachs. You know, these are stocks that are just kind of rallying back up into areas of resistance. This one's really interesting in particular. LNC. Lincoln National Corp. So kind of rallying back up into these weekly and daily kind of overhanging resistance areas. Pfizer, it's another one. UNM. Yeah, this one's pretty daggone attractive to me. VTR, Ventas. But if I go back into my kind of manual sorts, and I love to do this, if I want to see stocks that are trading below profiles that have just rallied back to kind of the top of the kind of Custer's last stance on the rally scene, you got AIG, you've got MNK, you've got Noble Energy. Noble Energy, I don't know. Let me take a look at Noble Energy. Let me switch back to my e-signal charts here. MBL. Yeah. Yes. I know, the XLE kind of popped here. Yeah, but Noble Energy is just kind of, I would lay off of that. I would lay off of it. XEC, Cimarex. This is another one. Let's just go over here to look at our weekly chart really quick. So, again, kind of not really participating too much with the market itself, but the XLE could drag this back up. So I might want to stay away from those XLE stocks in general. Let's take a look at the crude situation here. We didn't talk about that. Here's our weekly on crude, and obviously a pretty good reversal there, getting back above the 48.76 area on the May contract pretty powerfully. That was pretty serious move there. So dragged a lot of things up. Here's the daily on the May contract. So what do you do with crude now? A reversal back in the profile now. Again, you got to look at 48.76 as a big area of concern to pick battles. And, do you pick long battles or short battles around there? I think you kind of hope for a pullback here and you try to buy that inflection point. That being said, if we go into the scanner, we go in the ETF section, and we look at the XLE, I might want to look at stocks that just didn't even participate in the latest rally here. I mean, you look at Chevron, this stock should have probably bounced a little bit more. Let's take a look at ExxonMobil. Let's get down here. Yeah, this is one we were kind of pounding the desk about, Rig and ExxonMobil. Let's take a look at these two. We talked about ExxonMobil just, looking like it wanted to just do a power move up. This is a big move in a stock that's got a massive market cap, getting back above 81.51 and just really doing well. Let's take a look at Rig. This is another one that just kind of got out of the gate early. That's not a huge move, but I'm still expecting a little more action with this one on Rig. 12.12, again, you can orient stops on this one easily. Guys, stay tuned all day on TFNN. Have a good day trading.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.